going on, everybody? Welcome into episode 4 of the Deal Spotlight. We are back highlighting Diamondback and Endeavor, the massive wrap up between those two pure play Permian operators. Really exciting stuff. We went ahead and gave Stu an episode off and brought in a great friend of the show, John Ferrell. He's the CEO and co-founder of WellDatabase, the fastest growing oil and gas public database out there right now. I love WellDatabase, and really what we are able to do in this episode is navigate most all of the sectors and parts of this deal using specifically WellDatabase. It's an awesome tool. I'm very glad John was able to come on. We cover a bunch of different stuff. I mean, first we find out their cumin a lot of barrels real quickly. It's one of the things we like about it. We kind of dive into a lot of the pure analysis that they talk about it. And overall, it's an awesome conversation and really a great showcase of the power of what WellDatabase can do for you. I'd highly go recommend checking them out, welldatabase.com. Anybody can get signed up for free. It's what I love. Data is such this, people think data is expensive. People think data needs to cost so much. No. Go to WellDatabase, get yourself a free account. You're going to be able to get what you need. And then for pennies on the dollar, you're able to upgrade and get access to US-wide data. We love WellDatabase. We use it every single day, and I highly recommend checking it out. And I appreciate John joining us. I'm going to go ahead and toss it over to us. We're going to cover Diamondback and Endeavor. We'll see you next time. Well, let's go ahead and dive on in here. Super excited to break this down. I mean, John and I, we've got the wells loaded up here. I think the first thing that pops off the page, and obviously the first thing that they talk about in the press release, is the contiguous acreage. I mean, if you want to talk about two companies sort of right on top of each other, you could not get a better match from an acreage standpoint than this.
Oh, absolutely. Yeah. I mean, you guys a little bit off in the Delaware from the Diamondback side, but yeah, the core acreage for Endeavor and in this Midland Basin area is just super tight. And you're exactly right. This is a great option for a merger for operational reasons.
Yeah, I mean, I think considering, one thing, and the reason why I want to focus on that to begin with is because that was the big thing that they were pushing. I mean, if you listen to the earnings call, they were talking, the first thing they said was, hey, they're right across the street from each other. We could throw a stone and hit their office. That's how, we were able to negotiate this. And that's really good. And I think, part of what I think when we look into this deal a little bit more, they're playing that advantage card very heavily when we talk about some of the multiples, because you got to look here. I mean, $26 billion, it's, that's the overall payment that they're going to go ahead and start out with, and kind of the valuation they put on Endeavor. I think the interesting part's going to be is when we can kind of look in here and break out, okay, the difference between what that PDP and possible PUD valuation is. But I think the big high level takeaway here is the value is more on the combined overall value of what this company is than versus some of the individual parts being picked out of Endeavor. Specifically because of the fact that these guys are layered on top of each other. And we're now bringing Endeavor into the public eye. That's the other thing that I find super interesting about these publics buying a private. Now we get all this information on Endeavor that we were waiting around for years to find out.
No, absolutely. You couldn't be more right. And in the trend of the consolidation, there's a very clear correlation between growing your acreage and your multiple for your market cap. And so it makes sense on both sides. And yeah, getting that data and combining them together. It's very clear that this is a nice, clean merger.
Yeah, absolutely. So before we dive in here real quick, let's go ahead and load up slide 5 here. This is the transaction overview. So again, $26 billion, $8 billion in cash, $117 million of stock. Gotta love that. If you're also what that tells me is Audrey Stevens he still wants to be in oil and gas. Dude didn't take cash. Guy took some stock. He sees some upside in this. So maybe we should too. The other interesting thing is you're seeing the overlapping acreage. That's 838,000 net acres and about 816,000 BOE per day of net production. We'll be able to kind of check a lot of this stuff out right here. This isn't the bullet point we'll get into too heavily, but you're talking, 600 or 6,100 locations between the two companies at break evens of less than 40 WTI. I wish I had a few of those on my drilling plan, but they're talking about annual synergies of 550 million. That kind of goes back to specifically, we talk about the overlapping acreage. I think everybody And John, this is something you and I were talking about before we popped on here was, everyone talks about when they see that word synergies, oh no, layoffs. I'm not so sure if they go out of their way to mention, hey, that's not where these synergies are coming from. A lot of it's coming from kind of being able to apply best practices from both companies. They specifically go out of the way to talk about the simul-frac that they're doing, but it's going to be interesting to see specifically if they're able to achieve a lot of those synergy targets without necessarily looking at that head count.
Absolutely. I don't think it's avoidable when a merger that you're going to have some level of redundancy you're going to work with. But again, I do believe that Endeavor seemed to have their choice of suitors in this area. And if I had to take a guess at it, that was something that they took heavily into account, that they were not going to come in and reduce headcount heavily. Yeah, I think that plays in nicely. I think it's a nice operational consistency so that you don't have to just, I mean, day one, you can keep rolling and then, changes can be gradual, if any. As we look into these, we're going to see that these guys, they play really nicely together from an operational standpoint. So yeah, hopefully we don't see a lot of redundancies in here. Optimizations, they got a lot of work to do, a lot of spots to drill. And so I don't think that they need to cut a ton of headcount, but it's kind of inevitable in these situations. So
It is, and I think the last thing we'll point out is you look at that bottom right table there on slide 5. I mean, you mentioned this before. I think this is being pitched as an acquisition, but this really looks like a merger. I mean, you're talking about enterprise values of 36 billion and 26 billion for Diamondback and Endeavor respectively. I mean, that's, you're only talking about a $10 billion difference. Production is not terribly far off. You only got about 60 more thousand barrels of oil for Diamondback, only 60,000 a day. Some wish they had that. Base decline the same, acreage about the same, Permian acreage the same, and then obviously those gross locations. But I think that's the first thing I want to dive in here and look at, John, is specifically this is a merger more than it actually is an acquisition,
yeah.
even though it's being pitched that way.
Absolutely. No, I mean, I do believe the numbers break down at around a 60-40 on the stock
Yep.
side. And with Diamondback stock, I think it jumped near 10% on the announcement of this. And so I think that just lends to the whole fact that really believe that people are viewing this as a win-win for everybody. And it is more of a merger than an acquisition for sure.
Yeah, no. So, well, I think let's move. Let's take a look real quickly at just some of these high level numbers here. I love this view that you guys have. It's and this is one of the reasons I love your platform is you're very easily able to say, okay, we need to now go, especially in one of these transactions. You're an investor trying to figure out, what do I like this deal? Do I not? Do I buy Diamondback stock? A lot of what you've got to do is go back check a lot of the stuff that they're trying to tell you,
Right.
because we run this on our podcast all the time. IR guy of the week, they love to just throw numbers out there. Something like WellDatabase is the exact tool that's needed to go back calculate a lot of that stuff, which we're about to go do, which I'm excited for.
Yeah, absolutely. So yeah, starting at a very high level, I think so much of the core acres is going to be on the Midland side,
Mhm.
but when we're talking numbers, we're going to be talking the complete Permian assets. Now there are some fringe assets. I think that will probably be spun off to help appease regulatory bodies and things like that. So something that I can't imagine is going to get hung up too heavy when we just had, I know Pioneer and Exxon are still rolling, but I don't, yeah, that surely can't be an issue. But just quick look here, these are going to be your active producers across the entire Permian. You got Diamondback with 6,700 wells and Endeavor about 5,600. When we look at the production here, we can see that Diamondback has been acquiring a number of targets over the past
Mhm.
4 or 5 years. And so you see some decent little jumps in their production. That's mainly from acquisitions, whereas Endeavor's is mainly from drilling.
Mhm.
And so that's the thing to note here, because as we look at comparing their operations, we really want to focus on the wells that Diamondback has drilled, not what they've acquired. But again, production numbers look good. If we can come over and just flip over a type curve, and we'll look at this a little bit tighter for new wells. And well, yeah, that's going to be weighed down by some of the old ones. So maybe we'll come back to that in a second whenever we drop that in. From a total monthly production number, I believe, what are we looking at on the BOE in the 800 plus range?
Yeah, about 820 is what they're saying
Okay, I'm seeing 26.3 million BOE on a
on a
monthly
monthly
basis. Of
basis.
course, our numbers going to be trailing a little bit. They're going to have, January numbers in their calculations. We're looking at a lag of a couple months from the Railroad Commission. So you put those together, that looks about 850. So pretty spot on. Everything looks pretty clean that way. When we come back over to this product.
What I like about this is a real easy way to say, hey, are they using BOE 6 or BOE 20? Because I need to know that as an investor. I say BOE 20 because that's more the financial switch between, I mean, right now at $1.60 gas as we record this, it's probably 25. But that's another thing it's real easily to go and back check and say, oh, interesting. They're using maybe something, or maybe they're using, if you're using BOE 6 now, I don't know. Yeah.
Yeah, that's an interesting one. It's always a moving target, so it's never great. I can tell you from here, we can throw on this and kind of see the stack breakdown between these two. Turning off this log chart so that we can get a better, clear definition of the percentages. And so that's on the oil side alone. We can actually zoom into this region here and kind of see the breakdown. It does look, again, 60-40 might be close to the split on that production. We'll flip this over to the BOE 6 just so we can test and see, are we looking at BOE 6 or 20? Yep. We do both in WellDatabase because exactly what you talked about. They serve different purposes.
Sell side's going to love that BOE 6. Buy side, I'm a 20-1.
That's it. This is an argument to have. But this is where that 26 million number comes into play. That's definitely a 6-to-1 factor. If I go 20-1, we should see that drop down, and then we can compare that to what was said in the presentation there.
And again, I just love being able to see this, being able to dive into these private numbers now that we can see the other stuff. But yeah, that looks about right.
Yeah.
What does that say?
And we're looking at about a 20 million number.
Yep.
And so that 20 million number means what? About 657. So yeah, I think they are hinging on the 6 number. So we won't blame them for it. I would do it too if I was doing a press release on it. But oh,
absolutely.
But activity over time, you can see that we've trended, on the permitting side, it's been pretty even. Diamondback has been a little more active over time. If we want to look at wells coming online, we can see kind of what that looks like here to determine what that again, I think we're seeing a nice, 60-40 split on activity, on production. I mean, all of this is lining up as it probably should. Now, what we can do if we want to, we can hop over and let's look at just the Endeavor side if you want. So we'll filter down just to Endeavor. And
so easy just to do that. Oh, man.
Now let's flip over to that PDP look, if that's all right by you. And so this is the numbers that we like to look at to, break down on the PDP side. Of course, all of these are the auto forecasted that numbers WellDatabase does in the background. And we catalog several windows. And so we're looking at the 30-year EUR on oil. It looks like the PDP numbers we're looking at is about 204 million barrels on a PDP side. Doing some very back of the envelope math. We're looking at
like 12 billion.
Yeah, about 12 billion, 12.2 billion on that value, 10-year discount rate, and that's a real rough.
And I think what's interesting is to compare that to. So you got a 12 billion PDP for Endeavor. When we ran the numbers on the Crown Quest Oxy deal, you only got about 2 to 3 billion of PDP. So Endeavor has put together a position that the street's valuing 5 times more than Crown Quest. And that's just crazy to think about because Crown Quest was kind of the one out there trying to solicit offers in the beginning.
Right. No, and what did that end up? An $11 billion deal in the end?
Yeah, a 10 if you it was like 15 with debt, but yeah, 10 of it was the total amount.
Got it. And so the PDP is really solid. I think again, I would envision almost everything we look at in this deal is going to line up nicely just because they are so kind of a merger of equals and everything, it's no one's out there trying to overhype things for the most part. So that lines up really well on the Endeavor side. Let's flip over to the quick economics here on a type curve set, and let's look what that looks like. Now, this is another one. Actually, before we run this, I'm going to go ahead and filter this down to wells since 2016. just because the type curve on some of those historicals is not going to give us what we're looking for. In WellDatabase, this is all kind of built in for you again. You can pop over, grab this. We can recalculate our numbers, and we're looking at about $21 million on the oil side, 5 on the gas, and 25 million, almost 26 million in total revenue. Doing a quick look at the expenses, those look pretty simple, and so maybe we'll bump our drilling costs. What would you say, 10 million, 11 million?
Yeah, if we're doing 10,000-foot laterals, I like to err on the side of caution. I saw an AFE a couple days ago for a 10,000-foot lateral is like 11 million bucks. So
Okay.
we're not drilling pilot holes around here. If you got to drill a pilot hole in this acreage, you're doing it wrong, folks.
Exactly. Nope, I'm with you. And so what we're looking at total is about these $26 million wells, about 20 million expenses, about 5 million per location, based off of the Endeavor type curve. Now, that was something that we like to look at a lot, is comparing these type curves between these two operators, because someone will inevitably come in and say, we drill a better well. So, we're going to take all this existing acreage, we're going to make a bunch better wells. But let's go ahead and look, before we leave this, though, that $5 million range sound about right to you?
It does. And we can, and again, this is where one reason I love WellDatabase is it gives you enough information to basically quantify the entire deal at once. Obviously, if we were going to get in and bid on this ourselves, first off, I'll take 26 million if anybody's willing to give it to me. Second off, we don't quite know what benches all of these, they mention about 6,100 locations that are break even at $40 oil. I mean, I'll be, at an EUR, you see that up top there for oil of somewhere around, 380 million or 380,000 barrels.
Right.
If we were to get in there and go ahead and as you said, select, we're looking at 2016 and on. I mean, I bet you if you bumped that, that'd be interesting. Go bump that to 22 right now, and let's see how much that actually pumps up a little bit. Because my guess is what you're going to see is, well, and interesting. So it pops down a little bit. You're not actually seeing some new wells, but the interesting part is you're seeing a little bit of a cross there.
Yeah. The oil numbers still look good at 360. Kind of tweaking. We are hitting some terminal numbers, but yeah, for those points, they did drop a little bit. But again, I would take this with a grain of salt, knowing that you're going to have a number of wells that have come on recently, and we're type curving on. We could come in and put an end date on this to ensure that we have enough production to establish a good type curve, and so we might have some quicker drops. But again, we're running 360,000 EUR on these, and I don't think that's out of the realm of possibility.
No.
So, and if we flip this over to the Diamondback side, let's just double check that real quick. Luckily I can just make this call real quick.
So easy.
And so, yeah, there's jumps back to the 5.5 part. So I tend to think that we'll probably see that on both sides, but we need to cull the set down a little bit more to get a clear EUR on this.
I think the next kind of piece that really Diamondback is trying to highlight in their slides, if we'll pop up, you've got slide 13, which we can show up here, which is kind of benchmarking against peers, but really their big value, the value that they're seeing is the fact that this combined company is going to be the best pure, not only is it going to be the largest pure Permian operator, which is what they said about 3 times in their call, but their results relative to their peers are absolutely incredible. And, I think the best slide to look at, we'll go ahead and pop this up here. So slide 13, if you go and pull that up here, you're talking about, we're talking about current production. We're talking about net acreage. But the other interesting thing to look at specifically is we go to slide 8 here, and that is the 12-month oil cumes, and specifically oil in the Midland Basin. Diamondback and Endeavor, according to the slide deck, they are the top producers out of their peer groups, which is super interesting, considering that peer group includes ConocoPhillips, Ovintiv, Oxy, Permian Resources, Pioneer, Vital. We were having who knows? I like to say Vital because I'm fancy like that. ExxonMobil, which is, as John accurately pointed out, that's really XTO, and then also Civitas. So that's, I think, the other really cool part about specifically what you can do in WellDatabase is we can go, Okay, do we agree with that? Because that is critical. Because now if you're an investor and you're sitting there like, okay, well, this combined company, is it going to be better than if I just bought Conoco stock? I don't know. Let's find out.
Absolutely. No. All right. So I'm going to take this our search set here, and I'm going to convert it to a data layer so we can keep this. This is going to be the com the combined companies. We'll just leave it at that. And I'm going for a visualization standpoint. I'm just going to make it a solid color. It's going to help us. Actually, and I'm going to. You can do this in WellDatabase at school. We go ahead and give it a halo effect so we can watch these while we're still messing with all the other offsets. So you'll see what happens. It should circle up all my wells there. And so this is going to be useful because now I can come back in here and in our operators, I'm going to tack on in this area Pioneer XTO, which is a combined now when it happens. Oventive, COG, Crown Quest, and Vital, Vital. We'll just grab those handful and let's see what this looks like. So this is a nice look because you can in WellDatabase, by the way, we'll see that the combined companies will show here. And so that production is going to be what they are going to be moving forward, whereas we can still compare the Diamondback and Endeavor independently with the combined companies. So let's flip this over to a type curve and let's test that theory that they're about one of the top in the first 12 months in this area. So flipped on the type curve, we're looking at just oil, turn off the log scale. Let's zoom into the first 20 months or so. And at the 12-month period, the top is going to be COG, then the Pioneer, and then the combined companies come into a very close third. So all very tight, though. This window, you've got a few outliers with Crown Quest, Vital, XTO wells down here. Again, when they combine with Pioneer, that's going to be raised higher than it is right now. And then you have this other kind of cohort of these tight operators up here looking like on that 12-month scale. They're, gosh, all within, about 180,000 barrels, 171, 165. And the combined company is 160. Sounds like that's about right. Again, you'll have some new data for the last few months that will help, shift these for new wells that have come online. But all in all, you do want to see them in this top cohort, not in the bottom one. And so they're pretty close. I think it's a bit of a stretch to call them the top, but they're in the top few. And, take that with a grain of salt.
Yeah, I think as you mentioned, the top sort of changes, but you can kind of see, I love the halo effect here. If you just kind of look on the map, you can kind of see the dominance, not only of the acreage, but you can see exactly where, again, I think the part about the synergies that they've mentioned in this deal is big. And I say that because you can see the spread considering where both of these companies are relative to all of those competitors. They've almost chunked it off on, they've got this top third and the middle third, and they've left everything else specifically to the rest of them.
Yep, absolutely. It's really interesting. And obviously Pioneer, it is funny. These companies always want to say that their merger, their acquisition is making the best company. Pioneer was obviously the top dog in the Midland. That's what everyone was after. I mean, XTO, a company like Exxon, they're the only one of the few that could afford them. But you want to come down to second, Diamondback is right there. The XTO's position was good, but if you look at that curve down below, XTO was underperforming. Now with the combination of Pioneer, which was up top, they're going to be, the average is going to be right smack in the middle, which is going to be good for them. But Endeavor and Diamondback are right there. They're both good operators in this area. And we can look at when I can hide them as companies in this list and just look at the combined. That helps us look and see, we do see a little bit of a drop for those first couple. I'm not sure I want to call COG a direct offset. They do have it. They're all on the western base there. It's hard to call them a good offset, but still, again, I think it rolls pretty clean. They're in the top few. I wouldn't say they're the top, but top three, easy. So,
yeah, and part of that, where, I was at an A&D event last night where we were talking about a fake acquisition, and one of the big things that if you're going to buy a deal, you have to you have to somehow show there's upside potential, and whether that's either drilling new wells or we're just going to take the wells that we've already got planned to drill and we're going to apply some new technology. We're going to apply some operational efficiencies. I mean, that word is dead in my brain. Operational efficiencies. Like, okay, we get it. You guys are better than everybody else, but how does that actually play out? And I love being able to look at this. I thought the other thing that I wanted to look at when I was rolling through this slide deck here specifically was, all right, well, we can just move on. I think it's interesting. This is my favorite view right here, which you've got pulled up, which is being able to a quick snapshot of, okay, where are they relative to everybody else? Sometimes the line charts are great, but you can clearly see Diamondback and Endeavor kind of stand out right in the middle there, considering you get
Right.
rid of, Pioneer.
That's exactly right. If we, I mean, you want to lop off Pioneer and even XTO for this reason to kind of get them off the page. And if we want to wipe out Conoco there, then we're looking at where Endeavor and Diamondback are floating around that. This is 150,000 and 140,000 on their 12-month. That's since 16. If we want to, I think in the they quoted in 22 and newer
Yep.
in their
Look at
in the
that.
slides there. And so now we are seeing, I mean, that is super tight. 163 and 162. I think they were saying 170. If you ask me, that's probably just the last couple months coming online that we don't have that data from the Railroad Commission just yet. So I think that all looks clean and they look close together. And
And I
one
think it's
thing that
interesting right here before we jump off of this, going back to the last deal we evaluated, the Crown Quest deal, you can see the difference between Endeavor and Crown Quest, and why, if you start doing the PUD per value calculation on what Oxy paid versus what Diamondback paid, Endeavor has that higher multiple. For, in my opinion, this chart right here shows you
yeah.
the reason why that premium is a little bit bigger for Endeavor and why they were the ones everybody was circling.
Yeah, absolutely. I mean, and you can't deny those numbers are good. I mean, you can't complain with that. So I completely agree. I think that while you could say Pioneer was the first choice for most companies, Endeavor's right there behind them. If I do flip on Pioneer, if we're doing just since 22, you look, they're actually lower. And so whenever going back to 16, that's tough. There's probably at least one kind of completion vintage in there, and so I wouldn't weighing on that. 22 and newer, it's going to be really tight data, and that when you're talking about competing versus peers during that time span, they are number 1 and 2, and honestly 1 and 2 by no joke 500 barrels. It's crazy how close they are.
Absolutely. Can we look at, and this is something that you had mentioned we can look at, I want to see really the wells that Diamondback has drilled versus Endeavor, because you brought up a really interesting point earlier in this conversation, which was, hey, Diamondback's grown a lot specifically due to acquisitions. If we're going to now judge performance, let's go ahead and look at their specific new drills versus Endeavor's, aka ones that they've drilled.
Absolutely. Yeah. So let's we rolled back down. Now this is another cool part. Those black dots there are still showing us the acreage, but our active dots are the ones that we're evaluating here. So we're 22. We'll go back to 16 again because I think that's 22 and newer is a little tight. And Diamondback did make a number of their acquisitions. And so over that period. So as a formality, I'm going to flip over to the production dashboard and I'm going to flip this over to the original operator. On the Endeavor side, almost everything was Endeavor. Yep. They drilled almost every one of their wells in the last 6-8 years. And this lines up with what their website says. They have 1,200 wells that they've drilled over that time frame. So it's a non-issue on the Endeavor side. On the Diamondback side, however, you see Diamondback's responsible for roughly half of the wells that they've drilled. And then they've had a number of acquisitions over the years. And so whittling it down by clicking to just filter to the Diamondback wells that they drilled, and then doing the same thing on the Endeavor side, which is an easy one. We should now be able to break these down. Let's go over back to the current operator. Oh, and I got Diamondback here. We want to add Endeavor back on the originals. So there we go. And so on the original operator, so these are their wells that they're drilling. And whenever you look at just what they've drilled, that's total production, not that useful here, but we'll flip over to a type curve. And I don't know that I've seen two type curves that just tie in so tightly as this. I mean, let's flip over to the Cume chart just because we can see there's a little bit of a bump on Diamondback's early days. So they do, they do pull apart at a, a 48-month window. You're talking about a 290,000 barrels to 298,000 barrels. Still, 8,000 barrel difference over the course of 4 years is not bad.
No, we'll take it.
I mean, they're basically neck and neck.
Mm-hmm.
And so, yeah, this is a great time to hop down and look at some of the more, talking about operations. Let's look at the operator comparison dashboard that we have to help break these down. And so nothing to note of laterals. You're all 15, between 7,500 and 15,000. Proppant numbers are really tight in there as well. No interesting choke strategies of note. Nothing super interesting on the proppant loading side. Everything looks nice and run of the mill. Type curves spot on with each other on the oil side. Even their B values, their declines are just hanging out together. And on the gas side, you have just a little bit of a higher gas over time, but it's not nothing. But it's, I don't know. I mean, I'm not sure if gas is more of a liability in this part of the world or an asset.
Well, luckily, and we don't have to pull this up here because I think as you said, it's a non-issue. But one of the things, again, love me about WellDatabase is we could easily pull up the pipeline layer and see exactly where that takeaway capacity is relative to where a lot of that acreage is. Again, we're in core Midland Basin right here. I'm not too worried about that. What I would be concerned about is what are their gas marketing contracts, because that's really where you're going to take a hit, especially as we sit here and record this. It's about $1.60 gas. So that's where, getting access to, again, to those marketing contracts are going to still give us a better view. But the nice part is these guys are going to have the ability to, and specifically with the water, I'm going to assume they've got ample disposal going on in here. I don't think you have to worry about too much. We're not trucking water in this part of the country. Trust me.
Right. Well, and I would say I don't know the details of the Diamondback pipeline assets that might play into it as well as for what efficiencies you might be able to get to or the premiums you can do on the gas side. So yeah, that's a little bit of a question mark on my side, but yeah, overall, really nice and tight company. Their operations look really tight. I think this is, these two companies fit together. They fit like a glove. It's just a smart move.
No, it is in, the reason why I think a lot of these, and I don't say this is not my reasoning, this is a lot more smarter people have said this, but it's becoming more efficient to acquire your new acreage by either via an acquisition or a merger than it is going out and leasing up all this stuff, primarily because a lot of the good stuff is already leased up. And that's probably why you're seeing a premium for leased acreage that was in prime spots anyway.
Right. And it also makes sense with the market. As you're growing your acreage footprint, you're getting a different multiple. And I think that probably all comes back to the PUD locations. And it all lines up. And so, but yeah, you're exactly right. You can't just go acquire acreage anymore. And for what it's worth, you date back to, pre-15, the bonus prices being paid out here for lease acreage at that time were just astronomical. And so, I mean, that whole model is shaky. And so acquisitions are just, we sidestep all of that. We've got good PDP, we've got good locations. It just simplifies the whole process.
Yeah, absolutely. I'd like 20,000 in net mineral acres. So if somebody wants to, I'm sitting on an apartment complex. They might own their minerals, but no, it's interesting. What else did you find interesting as you were looking at this?
As I was diving into it, as what I just turned on is a grid map of the top acreage. This lines up with some of the stuff we were seeing before whenever we load in Pioneer. More than anything, I'll get rid of these original operator filters and we just tack on Pioneer onto this. When you look at so much of the best acreage in the Midland Basin, actually, let me flip back over to my current operator so that we can compare these. What we see is the Pioneer acreage when you highlight it, and you can kind of see it here in WellDatabase. They have a lot of the better acreage in the area. We have a few outlying spots that's killing my histogram here, but still, when you look at the green spots, your blues are your lows, and your green is what's good. And When we pull that in, we're looking at Pioneer. They really are heavy in that acreage. But everything else is you get into Diamondback and Endeavor and what their combined companies, they're really good in. I mean, they're really tight in there as well. The really kind of odd places in the Midland Basin where you've got some kind of duds, so to speak. None of the acreage we're talking about really falls into those areas, and so that's a nice thing that we see in here. Other than that, it's as clear as any of these acquisitions can get, or mergers
Yep.
in this case. You have offset acreage, you've got operational efficiency, you can combine offices by just walking across the street in Midland. Nothing to lose and everything to gain. That price that they paid with the 10% stock bump, all of a sudden that price just went up, oddly enough, for everybody. So again, everyone won. Nothing, super significant jumps out of this particular deal.
Nope. I think two things. I think, part of the reason why you see that eastern acreage be a little bit soft is we know the, primary formation they're drilling out here is Wolf Camp. You might slip in a few sprayberries here and there, but that Wolf Camp, as you move east to west across the Midland Basin, you get a little bit deeper. And so that's going to, you're going to see that stuff smack in the middle where it's a little bit deeper than that stuff, even on the eastern portion. Makes complete sense when we talk about some of that better acreage.
Throwing Pioneer back in here is an interesting thing to look at, though, because it really does highlight where they sat in this. I spend so much time staring at the Delaware Basin, that the Midland Basin it oddly feels like a redheaded stepchild in some ways. But it's really solid in the acreage that you see. But my next question is who's the next to get bought up? As we get brought in here, who else are we looking at?
Well, it's who can ConocoPhillips purchase, because I think they're the player that missed out. We know they were interested in all of these different companies. They were interested in Crown Quest. They got up it. They were interested in Endeavor Resources. They talked, one thing I love is when these mergers go through, actually, you can read the history of how the merger came to be, because you have to kind of say that in your S3 release. So it's really interesting to see. It's going to be interesting to see the back and forth that went. I think ConocoPhillips specifically is going to come into a little bit of an issue, because there aren't the bigger players have now been taken off the board. Endeavor was your last large player available. And the stuff that we have and the stuff that is sort of left, as you're seeing right now, is, SM's got a small position. Vital's got a small position. You might happen to start piecing some of those together in order to get enough kind of, and not to sound too financy, but enough value accretion that investors like it enough. Because again, that's one of the reasons, in my opinion, we saw the stock price jump 10%, is because the inventory is now doubled, and the run rate and the life of this new combined entity is going to be a lot longer. When, if you're SM and only have 800 locations, does that do ConocoPhillips any good? Well, sure it does, but you're going to have to layer that on with a few more, and you might have to see a 3-4 way purchase by Conoco in order to kind of bring it up to this level.
Yeah, I think you're right. I think there's, again, you look at Oventive here as an offset. You look at, obviously, Crown Quest is out, the Vital and SM. You're right. You pull in those three together, and you might have something that kind of kicks in close to what we were seeing with Endeavor there.
They've got Bakken acreage as well. So not that not that we don't like North Dakota, but that's just a whole nother area of operations. And does somebody like ConocoPhillips want to get in on that? We know they bought Concho, so they have a big focus in the Permian right now. And so I think it's going to be interesting to see what ConocoPhillips does next. That was, that was the first thing that I thought of was great. Well, ConocoPhillips is kind of the left without a prom date.
Yep. Yeah, but I think you're exactly right. I think I think by doing kind of multiple acquisitions, they can end up there where they need to be. And it'll be an interesting thing to watch, and that will be fun to evaluate.
It will be. I was going to bring this up a little bit earlier, but, this is a mostly stock deal, which somebody like me, it's a private company. Audrey Stevens can do whatever he wants. He can take the cash or he can take the stock. He took the stock in this case. And, to me, he's an oil guy. So that signifies he just wants to be, to me, it says he still feels like there's upside to be maintained, because Diamondback's going to come in and continue, quote unquote, not the legacy, but they're going to continue the premier operations that we've seen in the data. I think it's a sign that they took a lot more stock and believe in the acquisition and believe in kind of the go forward plan versus doing, more of just a cash out deal as some of these other deals have been.
Yeah, no, I completely agree. I think that also is probably lends to why you saw the stock tick up from that, because it was very clear that everybody's in for the next what's coming next here. So, yeah, all in all, I think a very good merger on both sides, and then I think both sides have won so far, and can probably will continue to.
Yeah, and again, the answer to the question, who got the better deal of this kind of string of Permian mergers? I mean, we're going to know that in about, we'll have to check in 12 months, and that's going to be the interesting thing to do is circle back a year from now and see, okay, has that performance continued or not? But again, what I really love is that we didn't leave an application to do all this analysis. And I know that's one of the big issues in the oil and gas business, and has been for a while now, is you've got so many different fragmented workflows that trying to consolidate them all under one roof. You guys have done a really good job at that. And I really want to highlight that. What's next for you guys as you think about, you guys have got a really great handle on the data side, and you've really done an excellent job of incorporating, as we were able to look at type curves. We were able to run economics in here that, again, no one's basing an acquisition off of, but we were able to get a really good rough estimate and sort of lines up exactly with what we're seeing the numbers come in at. So what's next for you guys as you guys walk down this road?
Yeah, what you're seeing, the way we can kind of break down this data and bring it to you quickly. I think what we saw today is the ability to make kind of go no go decisions on a lot of M&A activity. In a few seconds, you can hop on and get some numbers that may, like you said, might not be what your final offer is, but they tell you enough information to know, hey, is this a deal I want to move forward with or not? We're becoming down with some projects to help facilitate that even further, because one of the biggest parts that get into this, like anybody can come in and do a PDP analysis and a type curve. What's the intangibles? What's the outside? What are the offsets look like? What is the upside that might be hidden that's not so in your face? And that's really where we like to live. And so what's coming down the pipeline, and would love to show this off moving forward, is some of our M&A projects that are going to help you do even more analysis, offset analysis, kind of make your custom searches for you, include a lot more in fine-grained economics, kind of all wrap that in so that people can make faster decisions than ever. And like I said, like you talked about, it's not meant to replace anything. It's meant to make it where you can move faster. And
Well,
from there, you can take it down, whatever your bank needs, whatever your investors need. You take the data out. We support exports out to every major software. And that's key. We got to work together to make our clients' lives easier.
well, and we'll leave the M&A merger stuff up to JP Morgan. They've got their
Yeah.
Bloomberg terminals, and they've got everything to build these fancy models. I think what this is interesting is if you're like a non-op shop, for example, you're getting thousands of new opportunities every single day, and you have to have a workflow that can easily filter out 90% of them. Because trust me, there's not 1,000 great deals out there. There's good deals out there, but what you need, and what WellDatabase, and what I love about this software, is that it allows you to take that screening, takes those 1,000 deals on your plate, wheedle them down to 10 to say, okay, these are the 10 I'm going to spend the next 2 weeks doing the offset analysis on, really diving into the nuances between, what benches are these guys targeting versus, what's been actually drilled in the area. And a lot of this does come down to geology on that standpoint, but it's just so clean to be able to move this down, and it's really become an integral part of the workflow. So I love this stuff. It's awesome.
That's perfect, man. Thank you so much, Michael. I appreciate it. But yeah, we're just going to keep on adding and trying to make it easier for people to get this jobs done, get the things done, and move faster. That's really the name of the game.
Absolutely. So, well, we'll go ahead and we'll stop this here. We could spend hours diving into all this stuff, but I think everybody saw a good idea. I mean, I think we're in agreement here. Good deal. It's hard to make a bad deal when you're cuming 160,000 barrels in 12 months. It's going to be interesting to see how that go forward performs. But all in all, if there was a good deal to be made, Endeavor was the one to purchase, and I think I think Diamondback got themselves a winner here. So super excited. Definitely going to be back here doing more. And so we're just really excited. So appreciate everybody sticking around, and we'll be back for more.
Perfect. Awesome. Thanks, Michael.